Good day, and welcome to another episode of Analyst Insights, your plug for everything investments, economics, and finance. I'm your host, Rufaro, and I'm joined by my colleague, Ranga.
Good day, Rufaro. Thanks for having me.
We had an interesting week with the Minister of Finance announcing the midterm fiscal policy review. What would you say are the key takeaways from that announcement?
Thanks so much. So I think one of the first things to note is there was no supplemented budget. So there were no changes in terms of the revenue and expenditure proposition from the National Treasury for the simple reasons that the government is actually collecting more than that or what they are spending. So they actually have got a surplus for the first 6 months. So of the changes and proposals which were there was nothing to do with increasing revenue because they are doing well so far according to their numbers. But I think one thing that was quite outstanding was their projection on economic growth. So I was expecting to see some adjustment, but probably not the kind of adjustment that I saw, which was a positive one. So at the start, the economy was projected to grow by 7.4%, and the minister came back with a 7.8 percent growth, and that optimism, according to him, was being driven by what they were seeing in agriculture, where the sector was expected to now grow by 34%, more than 3 times the 11% that they were projecting when the year started. And it just tells you that accompanying that jump in agriculture were some maybe underperformance from other sectors, big surprise being mining, which was expected to grow by 11% when the minister first issued his projections, but now that growth number has been cut to 2%. And then other sectors that are peripheral are also not showing much in terms of the growth. And there's been some talk amongst the analyst community about that number, the 7.8. So generally, most people were expecting some positive outturn because we are coming from 2 years of negative growth, and there has been some improvement, especially when you look at the agriculture. But I think not the kind of jump that we are now seeing. And for me, the worry is on the fact that it's only one sector that is kicking, agriculture, and what's driving that is actually a natural phenomenon in the sense that we had an above normal rains received last year, and now you start asking questions about sustainability because you don't control the rainfall patterns. So what happens next year when we don't have maybe such a good rain season, and also the fact that, okay, if you step back and say what could have happened if we had a normal kind of rainfall season, if it took the 3 times jump in agriculture for us to post positive growth, it just tells you that maybe we're going to have another bad year had it not been for agriculture. Then some other things that I thought maybe were key takeaways is the fact that probably around 30 to 35% of government revenue is now in US dollars. So there's a number just under 700 million of revenue in US dollar that we collected for the past 6 months. And this is a positive development. It's speaking to the over-dollarization that's taking place in the economy. We are seeing that even in the corporates as well, where an increasing proportion of their revenue is going to be is actually in US dollars, and they're paying taxes also in US dollars. And I think that number could be higher. I think some are actually taking advantage of the arbitrage opportunities in having the US dollar and the Zim dollar operating alongside each other. So sometimes people can declare the profits or the tax obligation in US dollars, or even moving them to the Zim dollars. So maybe that's why there may be a need to really have some clarity, or maybe just moving towards the US dollar completely for all that revenue start coming onto the stream. So those are some of the issues. Then the projection on the inflation, I think we're anticipating that because we saw that drop is hitting July to 56, and they're now projecting between 22 and 35. Well, it's a huge range, but it just tells you that there's an expectation that we're going to have some stability. All of it is being driven by the increasing proportion of US dollar transaction that's taking place in the economy. So it's not an inflating sort of currency. I think the only proportion of inflation that you see is coming from the Zim dollar numbers. So I would say those are some of the key highlights. Nothing much in terms of manufacturing sector. They're expecting a growth of 7, but it's coming off a very low base, and there are a lot of issues to do with supply chain disruptions because of COVID. Then the unrest in South Africa, and also the problems in Mozambique. So very little, maybe more to do with foodstuffs and also beverages. That's the kind of manufacturing that we're still doing in this economy.
So are those numbers believable in terms of the growth projections, and what does this mean for our capital markets? If you're looking at the ZSE, a lot of analysts believe that it's fairly or fully valued. Fairly or overvalued rather. So what impact does Treasury's midterm fiscal policy review have on our outlook on the ZSE? Does it make you more bullish or bearish?
I think my concern is the economic growth is premised on just one sector, agriculture. So when you're looking at the ZSE, you look at the counters which are there, how many of them are agro industry processors, if you put it that way. Those ones are the ones that are most likely to do well, the likes of your seedcos, etc. And but then the rest of the economy is not expected to grow that much. So it just tells you that a bigger portion of those companies that are listed on the stock market may not achieve as much growth. But I think when you're looking in 2021, the growth numbers are generally coming within the range of 20 to 40, so maybe an average of around 30. But that is being driven by the fact that we are coming off a low base. 2020, that's when we saw the COVID emerging for the first time, and the measures that we're taking, for example, the lockdown, the impact of reducing activity. So now when we started seeing the economy reopening again, that growth was inevitable. But if you start comparing that growth maybe with some of our best years in the last 20 years, maybe if you're using years like 2014, 2015, I think we're still way off the mark. It's just the growth that you're seeing because we had a difficult year in 2020 where most of the businesses were operating at way below 40% of their capacity. So are the numbers believable? I think the outturn in agriculture was to be expected. I mean, it's there. So it's certainly clear that we're going to have a big season. The tobacco season has already confirmed that, and also on the cotton side, there are indications that a bigger crop is likely to come through. And certainly on the maize, every week we are seeing some numbers increasing of deliveries to the GMB. So I think that aspect is there. There are certain numbers that I have problems dealing with. Maybe it could be numbers to do with like the developments in the international arena in terms of whether I'll be able to generate enough foreign currency to meet some of our needs and etc. But I think what has happened so far just shows you that there's money that's coming into the market and is supporting activity, and most businesses are seeing that through increasing amount of transactions that are taking place in US dollar terms. So is it enough to justify the activity on the market? I think I still think that the market is looking pretty overvalued for most of the stocks, but there are certain opportunities that are emerging in other businesses. So you have to be selective in terms of the stocks that you have to pick. the overall market at 5.5, maybe going towards 5.6 now, even 6 billion, it cannot be explained by the growth projection that we saw in the minister's statement.
So basically, could it be that the market participants have an inflation outlook where their view is that inflation has probably the inflation trend that we've seen year to date is likely to reverse. We've seen rates on the power market start to move up, and that's usually a proxy for a return in inflation. So could it be that market participants are anticipating significantly higher inflation going forward and have priced it in? So maybe when you look at it from today's valuation, the market is overvalued, but if you're anticipating significant further movement on the power market and significantly higher inflation for the rest of the year, then in real terms the valuation is significantly less, and this probably explains why you have all this Zim dollar capital paying for shares at these inflated valuations, because the outlook is negative.
Yeah, so I think so. I guess for me the best way to look at inflation is to look at the what's happening with on the power market, where we are still seeing the rate actually sliding further, um, and and because predominantly the transactions that are taking place for most people are in cash terms. So if you're going to buy something in US dollars, you need to have cash, and most of that cash for most people they have to get it from the power market. That for me sort of explains the kind of inflationary developments that are in the market. Because if you were paying say 120, 125 a month ago, and now the rate is 145, going to 150, surely that's some inflation for you. Although maybe the product that you are buying in US dollar terms is not changing its price. So I think, but then it would then depends on what will happen going forwards. If we continue seeing an increasing number of transactions taking place in US dollars, the economy is becoming more dollar denominated. I think the inflation issue will fall away, because this US dollar on its own is quite stable. But if we see some policies that are meant to try and prop up the usage of the Zim dollar, I think we'll have serious problems with inflation. Already you are seeing that in terms of the activity that you beginning to see this week on the market and also on the power market, that there has been some liquidity that has been injected onto those markets, and then demand for assets has gone up, and then asset prices have started going up. That's not a sign of a stable environment, if I could put it that way. So as long as we keep seeing this money coming through from whatever sources, it will come and upset the inflation stability that we are seeing. So the numbers might continue to come down, but the reality on the ground, it won't be that, because we still see the Zim dollar losing value against the US dollars, and that's a concern. So I think that's where the problem is going to come from, where the local unit will continue losing value against the US dollar, and hence will have some inflationary impact on a transaction in the economy.
So could the markets be missing something though? Because one of the things that Treasury spoke about during the midterm fiscal policy review was the fact that they expect to receive more than $1 billion in SDRs from the IMF. And given the size of our economy, I think the last number that I looked at in terms of the backlog on the auction, the forex auction, was 200 million. So assuming this money actually materialized and was injected into the foreign currency auction system, could we not see a significant pullback on the power market? Is the market missing this?
Look, I know there's a lot of buzz around the SDR issues, but look, I think when you look at the Zim foreign currency scenario, it's not like we're not generating enough foreign currency. I mean, at 6 billion a year from our exports, export proceeds, and also diaspora remittances, this is a huge figure, Farah, and I think quite a number of African countries will struggle to be generating that amount of foreign currency. I think it's more to do with how it's used, how it's allocated, which tends to be a problem. And I don't think that will be solved by just 1 billion. So if we can't deal with our issues with the 6 billion that we're generating from our sustainable kind of income streams, what magic do you think a $1 billion would have? Already there are expenses that are there. You might start seeing maybe allocations on the foreign current on the auction are being increased, and the leakages will continue. I don't think there'll be any magic. There'll be any differences that will flow from this 1 billion. It will just disappear the way the other receipts are disappearing. It's good. It's a good vibe. That's why the market is not really responding to that. We have seen that in some other African countries, Zambia being one of them, where the anticipation of those SDRs, obviously, together with their own economic driven policies, the kwacha has been strengthening. You are not seeing that in Zim dollar because the expectation is the 1 billion will come and it will just disappear.
And on that sad and pessimistic note, we come to the end of another episode. Thank you so much for watching. Please like us on Facebook and follow us on Twitter. As always, we welcome your comments and feedback. Cheers.